Hello, everyone. Tim Allen with the Massey Group at Compass. It is February 8th, 2024. This is your quarter one real estate market update. Still have a market that's dominated by low inventory, not enough inventory for the buyers that want to buy properties. This imbalance favors sellers, and this is further exacerbated by the fact that mortgage rates peaked. Well, let me back up a step. The 10-year Treasury peaked at about 5% in October 2023. It then fell to just under 3.8% in December 2023. Mortgage rates tend to trail the 10-year Treasury. That's your best barometer as to what's going to happen with mortgage rates. It's not necessarily a one-to-one ratio. When rates peaked at 5%, when the 10-year Treasury rate peaked at 5% in October, the highest priced mortgage that I saw was 8.5%. And by high price, I mean low down payment, average credit scores, that kind of thing. That same product, the mortgage rate fell to 6.5% when the 10-year Treasury went under 3.8%. What does that mean for the market? Well, the rule of thumb is for every 1% change in mortgage rate, that affects the buyer's purchasing power by 10%. So 1% drop, buyers gain 10% purchasing power. 2% drop, they gain 20% purchasing power. In other words, at 8.5% versus 6.5%, the rise in price by 20%, the mortgage payment's the same with those, if that makes sense. I can clarify further, just give me a call. Anyhow, there's different rates, different products out there, depending on how much money you're putting down, what your actual credit score is. So don't quote me on that, but just kind of giving you a worst case scenario or an high level overview of what's going on in the market. Where do we go from here, or what's happening now in the market? Well, as suspected, as rates fell, we had more buyers into the market, and we had buyers that were capable of doing more with their financing, that increase in purchasing power. So we've seen a lot of properties with multiple offers again. There's competition back out in the market. Like I said, we have more buyers coming in, or buyers capable of doing more with their money in a given supply of product, supply and demand. The demand is outweighing the supply. So we're seeing properties sell over asking price, and if they're not selling with multiple offers and selling over asking price, if it's one offer, they're surely taking less time to sell, showing another sign of increased demand out there in the market. Where do we go from here? Well, I said that the 10-year Treasury bottomed at just below 3.8% in December. Today, on February 28, 2024, it currently shows just under 4.2%. So it's rebounded off of that recent low. In December, we had a Federal Reserve signaling 3 to 6 rate cuts in 2024. The market liked that news. They've pulled back off of that based on the recent jobs data that was a little bit more robust than they were expecting, signaling that maybe inflation's not under control or not where they wanted it to be. So where do we go from here? I'd expect the trend of mortgage rates to be lower because the Fed's already done what they needed to do to correct. They're just trying to make sure that we don't go into a deep recession now. But we also have an election this year, and I think people will give pause as the election approaches. It always happens. So I expect a robust Q1, Q2, probably parts of Q3 as people start to give pause as the election nears. I expect values to rise. I expect mortgage rates, the trend to be lower towards the end of the year. We're going to have some volatility in there as new news comes out and new data is presented in front of the Fed to see where inflation is. And that's it. Again, Tim Allen with the Massey Group at Compass. Give us a call. If you're looking to buy or sell, be happy to take care of you. Have a great one. Talk to you soon.